Selling puts for income. Nvidia is the biggest company in the world. SPY is the biggest ETF in the world. Which one is the best one for selling puts? Stick around because I'm going to show you exactly in this video who the winner is. And you just might be surprised. Welcome back to the channel. I'm Michelle. This is Cressivo. This is where we talk all about selling options to create weekly income. And we're talking about selling a put today. Selling a put, you're committing to buy 100 shares of that stock or ETF if the stock drops below a certain price. Now, SPY is the biggest ETF in the world. It's almost $800 billion in assets. And lots of people think it's safe because it's really popular and really big. But is it really safe? Let's check it out. First of all, the top holding of SPY is Nvidia. And all the other holdings underneath it are companies that move kind of just like Nvidia. Let me show you what I'm talking about. So here's a chart comparing SPY to Nvidia, its top holding, and Apple, its second top holding. And they all look pretty similar. This is what I'm talking about. One goes up, they all go up. One goes down, they all go down. So if they all kind of move the same, how do you choose which one's the best? Let me walk you through it. Okay, since we're talking about selling a put, the best thing to do is to calculate how much we can make doing that and what the risk is. It's really easy to do using this app. It has a really cool trade builder tab that does all the work for us. So let's start off with SPY first. SPY, fetch the data. Now when we sell a put, we have to choose the expiration date. Let's choose something about a week away. Let's say August 17th. And then we have to choose a strike price. That's the price that we're going to buy the shares if the stock drops lower. Now there's a really cool cheat sheet way to estimate the likelihood that the stock is going to fall. And that's delta. We can see that by the little triangle here. So let's choose something with a 30 delta, meaning it has approximately 30% likelihood it's going to fall below that price. So there's 70% chance it's going to stay above and you won't have to buy the shares. Either way, you keep the premium that you earn on the trade. So for SPY, a 30 delta is 767. Here's what that means, guys. That means you're committing 76.7K in capital just to make the trade. That's a lot of dough. Now this pays $257 as we can see here, but because we're putting up so much money, we're only making a little bit more than 15%. I don't know, is that high? Is that not high? Let's compare it to Nvidia and check it out. So let's put Nvidia in here and let's look at the same Friday expiration date and let's look at the same 30 delta. That's a $217.50 strike price. So that means we're only putting up about 21.7K, less than a third of what we'd have to put up if we trade SPY. And even though we're making a little bit less money, $206, because we're putting up significantly lower capital, our annualized rate of return is more than triple, 43%. Now, if we're trading a put on SPY, we need at least like $70,000 because it's a really expensive ticker. Nvidia, on the other hand, trades only about $200 per share. So we need about $20,000. What does that mean? That means that we can sell 3 puts on Nvidia as an example, instead of 1 put on SPY. So what do you guys think? Are you team SPY or are you team Nvidia? Me, I'm team Nvidia all the way. Now, if you want to see more videos like this, make sure you're subscribed. And if you want to practice this in real time, join the Cressivo Cup. It's going to be a super fun paper trading competition where you can learn great strategies on trading and you don't even have to put your own money up at risk. There's no better way to learn. Happy trading.